Right. Today is the 7th of December. Let's go look at the charts and see what's going on. So I'm looking at the pound loss first. Okay, pound loss. Let's see what we have. This is a monthly time frame. Monthly time frame. Not that we're gonna trade it. I'm just looking at this chart to see. Just get a big picture, idea of what's going on. Okay. Well, I do notice this big candle has taken out this bearish red candle. Okay, it's just something of note. Just something of note. Something of note, but since we're not trading on the monthly for now, so I'm just going to go down to the weekly and see what's going on. I see. Well, MACD is just one piece over here. Whatever this wave is, there's no guarantee that this has ended. Ended meaning there's no guarantee that that this cannot continue to the upside. Right? There is a 1, 2, 3 over here. I see that. And now we're at the top over the top. So it's 50-50 really. There's not enough information here to trade because either up or down, both are possible. Both are possible. Let me just see what's going on over here. There's one level over here that would be of interest though, just this level over here. This would be a level of interest. Now, one trade setup would be this price action, right? If it could go above, break this top here, then come back below, and then and come back down, that would be a very good thing. So then that sets up a sell. That means you can actually sell to the downside once that happens. Right? This is for the weekly. Okay, I'm looking at the weekly. What if this one comes up here? Can we sell this? The answer is no. We cannot do that, right? When it comes up here, you can look for scalps. It's possible, but not for a swing, right? A scalp is just a reaction. It will come here, react. Maybe it goes down, but maybe it goes up too, you see? It's 50-50. So if you want to take a sell here right at the top, it's just a scalp. It's just a guess. I hope that you can go. If I'm wrong, maybe 6 pips or 10 pips, because you are selling at what you hope is some kind of, what they call it, resistance, yeah? That's what they call it. But it's not a swing, okay? It's not a swing, I repeat. It's just a reaction from the market, that's all. A swing requires a lot more things. Like for example, a swing requires this is a green candle, it was taken out by the red, came out here, and then another green was taken out right at this level. So that produced a swing. Of course, you get impulse correction. You get greens taken out of the move down, right? See, these greens are being taken out. Greens are being taken out, basically. So over here, there is no such thing right now. There's no such thing like you don't have a green being taken out like this. It pulls back, and then there's a green candle here like this. Then a red that takes it out, and so it goes down. So you don't have any of that on this time frame. Okay, so there is no swing trade here on the weekly. Again, does that mean you cannot trade? No, you can scalp it, right? This moves here are worth some money. They're worth a little bit, 50 pips. May not even be able to get 50, maybe get 10, just aim 10 or something on the lower time frame. Again, so I just described a reaction from this level and also what a swing trade should look like, which is like this, or it goes up and then comes back down and then pulls back. That's also a good sell, okay? The reason why you need that is because, so this is very important, is because this move up, this is a swing, a swing that's going up, but there is no sign of bearishness, right? If it goes up and then it comes back down, this move down is a sign of bearishness, that there are bears in the market pushing it down. This thing is now pushing up. Where are the bears? You see, you don't know whether there are any bears. That's why this move to this move up to this level, and this move down to below this level, they are not the same, okay? This move up, hoping for a swing down, as compared to this move down, that pulls back, and then you go for a next swing down. This move has got bearish power. This move that we want, no guarantee, right? So pay attention. That is super duper important for you're going to be a very good CFD trader, understanding what it actually means. Okay, CFD trading, best skill in the world. Right? It's like Roger Federer winning the Wimbledon 20 overtimes, maybe even harder. Okay, it's a very difficult game, right? You are competing against the entire world, not just a couple of people at the Grand Slam. You know, it's always competed by by a few people, Nadal, Djokovic. But this one, you're competing against the brilliant minds of the world, so you've got to be really, really on point here. It's really good. So that point which I just made about reaction trade and swing trades, okay, we have to be quite clear on that. Now, let's go look at the daily. What do we have? Let's just go down to 4 hour. Okay, so this is what you need, all right? What you need to do is you need to draw a trend line like this. Now, most people draw trend lines, say, Sherman, but I thought trend lines are like that. Yeah, that's a trend line too, but let's look at it a bit different. All these are just pattern lines, just pattern lines. You're just trying to find a pattern in the market. So this is what actually you're looking for from the pound horse, okay? Boom. When price came down from this level, there was a boom up. Here, nothing happened. Price came up here. There was a bounce, which went sideways, but never broke this low, and then boom up again. Right? Price came back down. What happened? Price boomed up again. So now we are over here. So the main thing that you're interested in is if price comes up here, what should the bias be? Because in swing trading, bias is very, very important. Right? You must have a bias. People who say you don't need a bias. That's not true. All right, that's not true. You must have a bias. You must know an educated guess where it's going to go. That is swing trading. In scalps, there's no such thing as a bias. All right, there's no such thing. It's just a reaction. You know, but in swing trading, you need that bias. Yeah. So this is what you call a bias. Meaning that you've seen a pattern here, boom. You see a pattern here, boom. You've seen a pattern here three times. You've seen a pattern here, and that will be your bias. Now, how to actually trade this? That requires understanding of wave theory, and I teach this in my price action course. It's not the usual stuff that you find on YouTube for sure, but what I'm trying to do on YouTube is just to show people what trading the bias is. Okay, so this is one way of finding the bias. That means pound horse, the bias is you're looking for the swing up. You're looking for price action, or let me give some idea. If you're looking for a breakout towards the upside, okay. So that's pound horse, 4 hour swing. I think euro horse will be about the same. Let's just skip that. Let's go to euro dollar. What's euro dollar? Euro dollar is basically you're looking for okay, so let's try to find the bias of this. Which direction we think it can swing. Now, if you look at this 1, 2, 3, there was a big correction there. One strong move down. Yes. So right now, question is, will this just continue making its way down? Because what you have here is the very typical Elliott wave, because this wave is really strong. So it's like 1, 2, 3. Now this could be a 4, this could be a slow 5. That's one possibility. There is also another possibility that this price can go up here, break this top, then it swings down. That is also possible, unfortunately. And why this move is very possible is because of this very lousy, it's very lousy, you see. It's just a lousy look. And of course, this can just keep crawling until it breaks this low. Unfortunately, that is possible too. However, at this point in time, what you're looking for is mainly, you're mainly looking for the buys, right? Because of something like this over here. If you look at price action, you see how it booms up. This one boomed up, but not far enough. This one boomed up really far, and now it's here again. So if you're not looking to pick this bottoms over here, that means you're looking for a push, trend line that way. You're looking for a strong push to the upside, a pullback. This will set up your buy. And once you're here at the top, you have to get out of the trade. There's no such thing as I buy here and then I hope that I'll get another third wave. No. Unfortunately, if when you go to the daily, see MACD is all red. This is still in a downtrend. So what you are playing is a potential correction, just a potential correction this way. All right. If you put on some kind of Ichimoku like this, you see it's all down. Yeah, you see that this thing could just possibly hit this cloud. You see when price action, see what happens. It hits the cloud, breaks, and then what happens? Boom, boom. So when this one goes up, it could, see this boom down. Yeah, that could happen. Boom. So we gotta understand that this, because of how sad this looks, the downside, you're very interested in this upside, but you don't just buy like I just buy here, and then I just pray that it gets up there. No, what you're looking for is it's an increased, more confirmation that you can actually go. Because all right, if you just buy here, you have to take out some profit immediately because there's no telling whether or not this just pop, just that. Right. So if you're just taking a buy right from here, like a bounce, once it goes up, you have to take the risk off the table by taking at least 50% or so, or 60%. Then see whether the rest can go. If it does not go and it comes down, well, at least you didn't lose money. Maybe you earn you didn't lose money, but at least you earn some. Depending on how much was taken off the table, right? When price moved up a little bit in favor of the upside, right? So which way is best way? I think both can work. Up, down, up is the safer way. Taking a bounce from here requires one who is ready to take the loss if it doesn't go, and it just from here it just collapses, and this becomes here. Okay, so the buy is still up though because of this lousy move. Okay, the lousy crawl to the downside. Let's look at it. 4 hour. Well, since I like the upside for the euro dollar, it means that everything needs to be upside as well. Sorry. Everything needs to be upside. Okay, so for our let me see. Again, this is a potential to get up to this level over here because of the idea that this could be yeah, it could be this. So this is on the outside. This wave is down here, and yeah, so 1, 2, and 3 pound dollar to this top here. That's it. Very possible. Very possible. Pound dollar. Yeah, and don't forget you're gonna go right into the cloud, like stuff like that. So you gotta have the conviction. You gotta have the conviction. Right? This could be that. There's a potential pattern that you're playing for, which is this potential correction. Let's say we go to the 1 hour and see whether we can trade this. So turn off the cloud because it's very distracting. This is a 1, 2, 3. It comes down. 1, 2, 3. Yeah. So basically, what you're looking for is something of such a nature and such a nature like so. And when this one breaks up and pulls back somehow, like you see this kind of comes down and then pulls back, comes down and then pulls back, and then comes down. One big one to clear out everybody and then dive down. Well, you see it comes back, goes up, comes back, just exactly what you're seeing over here. Or like stuff like that, okay? Here, see all this? Boom. So if you see all this little pullback dips, yeah, there. And then don't buy and then keep, no, because I already explained that this is a potential correction, and once it gets there, it can dive again. So just play to the top and know how to manage this to the upside, okay? Yeah. So there's euro, there's pound. Should I talk about Aussie? Let's just keep it short. See, let's talk about the dollar yen. Dollar yen, dollar yen. What is the dollar yen? What are you up to, my friend? Okay. Dollar yen has this look though. Looks like one. Ooh. Dollar yen is quite tricky. So dollar yen seems to be progressing to the downside. Now this line is a bit premature, but if this line actually does hold, and this sharp pullback is all you get, right? Which is tricky, that would mean you're looking at something like this. And these are all the sideways. And if this is a sideways, like so, then this structure would then be a 1, 2, 3, right? And of course, there'll be a big sideways, which is a 1, 1, 2, 3. And this sideways could actually be 1, 2, 3 like this. So this wave end up being that way. 1, 2, and 3. In this third wave is actually a 1, 2, 3 as well. Okay, so 1, 2, 3 making one wave, 1, 2, 3 making a second wave, 1, 2, 3 making a third wave. That is very possible. So how do you trade this? I just buy here. I just sell it right here. Now you don't know that, right? You cannot do that because you don't know that. You don't know what if this just pops above. Okay, we don't know that. So what you need is a breakout, right? A breakout to the downside, right? A breakout here will be perfect. That's what you want. So let me just clear everything. So which means that once you have seen that pattern, what you're then looking for is you don't want if this you're just waiting to see what breaks. If it breaks, that means it is likely here. You can try to sell it down. The easiest one, of course, is something like this. 1, 2, you see that? Boom, and then it goes far. So if you can get that'll be perfect. Boom, and then it's expected to go far. Right? So that would be most ideal for you to break this low, to come to the downside. Okay, so this sharp pullback is a very tricky sharp pullback, and the whole thing is actually a sideways. Something just like this to the downside, just sideways structure to the downside. Very tricky. Okay, so let's see whether it actually breaks out. Okay. And what else? Let me just look at gold. Maybe I'll just run off with gold and then that's it. Nice shot and sharp. Okay. Now gold is currently strong to the downside. Okay. So if you look at here, green to red, the whole thing is to the downside right now. Put on the cloud. Okay, the cloud is not helpful. Let's go, but the cloud is now helpful. So yeah, see? So now you are currently in this downtrend. You're under the cloud, it is significant. Okay, these clouds, they do mean something. Don't look down on them because you see, the cloud corresponds to all these levels. So when you pull up to there, it's a visual representation of what is on the left side. So bam, when it goes up there, it didn't dive, but look, it struggled. So these clouds are pretty important, right? So now that we know the clouds important, let me just remove that. Just wanted to showcase that for a while. The other important thing is that we need to focus on staying with the trend always. So this looks like a 1, 2, 3, 4, 5 wave, right? 1, 2, 3, 4, 5 wave. Okay. How do I see that? 1, 2, 3 like this, a 4 wave, then a 5 wave. And then it has this sideways structure like that, which is itself. What's this? It's itself a 1, 2, 3 actually. Right. So let me just remove that. Okay, so I think you can see that. What you need right now for the continuation of this, right, is you actually need a pullback. A pullback that goes to at least around these levels here. It could even go up to the 50%, right? And these levels will then correspond to somewhere around, if I go out to 8 hour, see around here, beneath the 8 hour cloud, it's important, right? Somewhere around here, if you ask me if I was to take a buy up there, if I was to wait for this to come back here, this is actually a place to buy, right? I see a price action. And why would I be interested in this buy? Because of impulse, the correction here, and I see a price action here that tells me buy. This is a good buy. Tick. And remember, we are all about price action and about breakouts on. So once I get my bias, which is very important, to know which direction you're trading towards. Otherwise, why don't price action just go down? You see, if you just buy it here, what if this happens? So you have to actually set up, you have to know how to make sure that price says there's a high chance I'm going to do this and not that. And that's why time factor is very important. It gives you a hint on whether price is going to head in that direction, like this one. You see, why don't price just head up like that? Yeah, why? See, because the thing is that you wouldn't know until something like that. And then what happened? Price breaks out here again. Oh man, how do I draw this? Yeah. See? So price came down, price went up, price came down, and price went here. A correction within a correction. A third of the third. Third of the third. 1, 2, 3. 1, 2. 1, 2, 3. 1, 2, 3. Right? The third of the third. That's why this flies far. Right? So this is one of the best swing strategies out there. I've never seen anybody able to trade like that. Right? It's probably the 5% of traders who can trade this way. Most people who do well are probably also scalpers. So that's also very good. But firstly, for me, scalping is not enough because scalping sometimes you just don't know what is going on actually in the market. So for me, understanding the swing and understanding the scalp are both important to me to be complete CFD trader. Okay. It's a very rare skill. I don't know many people who actually know both styles. You know, personally for me, I knew the first style of swing trading first. Scalping came later for me after I saw some people doing well in it. Right, but it's so not necessary to learn both. But if you're really passionate about CFDs, then it's good to know. It's good to know, right? It's good to know. Scalp and swings. So where was I? Yeah. So let's come back to the 1 hour here. So you can see it's really meandering above the cloud like so. And so if you're looking for a good position, that would be a good position, right? We call it the WXY, the ugly four, and the one more up, which I have taught before to some of my people that I was sharing with. So you're looking for price action here, right? Something like that. Then of course you're looking for a reason to buy. A reason to buy the upside. A breakout's outside. If you don't wait for a breakout, you see, then you just buy it this way. Well, you could get a reaction and then you have to take off the risk immediately because you just buy this, it could take a bounce and then just collapse again. And if it does that, you want to be break even or make a small profit, even though it did not work out, right? The other way, of course, is confirmation. You wait for it to break out. You look for, you must understand this little patterns to the upside. Let's say it goes this way. Okay. You see like this one, you see like all these, okay? Like this, like this, like this. So it just breaks. See, it just breaks. So if you look for this kind of sideways movement after this has happened, you see it breaks. See when it breaks, it just goes. It breaks, it just goes. So this is what you're looking for, right? So that you know what to look for, the timing as well as how to actually take these trades, right? Time factor trading. It's just the best, man, honestly, for trading swings, okay? You have a full understanding of what's going on in the market. Very important. All right, so I'm going to end off here. Know what to look for, know where the bias is, know where price is going to go by using time and knowing how to read the waves. All right, timing and waves. the most crucial thing in swing trading. Timing, timing, timing. All right, take care and have a nice day. Bye-bye.